Good evening, everyone, and welcome to tonight's webinar. This is the next webinar in the Productivity and Profitability webinar series being brought to you by Meat and Livestock Australia and Agrista. MLA Productivity and Profitability series is designed to assist sheep, cattle, and goat producers to increase the productivity and profitability of their businesses. In this series, we will provide you with timely technical information that's relevant to producers across Australia. My name is Tanisha Shields and I am a consultant with Agrista and I will be your host for tonight's webinar. In this webinar, we will be hearing from Basil Doonan of Pinion Advisory all about spring pasture management. Basil and I will be discussing how to maximise feed utilisation and production during spring. Before I hand over to Basil tonight, we've got a little bit of housekeeping to cover off on. Tonight's webinar is being recorded, so you should receive a copy of the recording following this webinar, and it will also be available on the Agrista and MLA websites for you to watch again. We invite you to ask questions of Basil throughout the webinar tonight, and we will address those questions at the end of the session. To ask a question, we will be using Slido, so please go to slido.com and enter the code OCT2023 to ask your questions. Basil Doonan is tonight's speaker. Basil has over 25 years' experience in farm business management, training, and consultancy. He has worked extensively in Australia and overseas in grazing industries, primarily consulting to farm business owners and managers, and developing and delivering farmer training programs. He has consulted to research and development corporations, multinational companies, investors, farm owners and managers, and specialises in pasture-based grazing systems and their management. Basil is currently consulting to dairy, beef, and sheep businesses, and is also involved in ownership and management of grazing properties in Tasmania. Thanks, Basil. I'll hand over to you to start sharing. Just while you're getting your screen up to sharing, reminding all those that have just joined a little bit late to ask questions tonight, head to slido.com and the code is OCT2023. Thanks, Basil. Away you go.
Can you see my screen, Tanisha?
Sure can.
Cool. Well, thanks very much for the opportunity to speak. Hopefully my slides will work. I'm strong on participating in these meetings, but not so good at hosting. So anyway, I accepted this opportunity, I think, 3 months ago, and thought it'd be pretty straightforward. But since then, I've discovered that I've got to talk about spring pasture management for 3 rainfall zones, 2 grazing systems, 2 seasons, and 2 enterprises. So I think my presentation's reasonably high level in terms of it's not super technical. We'll talk principles, but yeah, then with respect to the questions, happy to dive into the technical detail then. So for me, yeah, I look forward to spring every year. I reckon it's our limited opportunity to attack. We spend most of our year defending. We load up during winter. I always feel that we get into spring. I'm always wondering in that first month or 2 when it's going to arrive. I spend another month confirming that it has arrived, and then I spend the last month sort of wondering where it's gone. And I guess at the whole time, even within our own business and within our client base, through that period, we're trying to knock out 50% of our annual production. So I feel like as primary producers and graziers, we're actually quite good at playing a defensive game. And I think it's often why we miss the opportunities to attack in spring. So I'll cover a typical and a failed or a failing spring, or just the end of spring. So really the way we manage towards the end of spring is kind of the same as a failed spring. It's just that spring never arrived. Really across Australia, you know, particularly in the southern feed base area, it's really a tale of 2 or 3 seasons. So, you know, there's areas that have had no winter rainfall and nothing much in the spring. There's those that have had that recent East Coast low and have got some rain off the back of what's looked like an ordinary start to the season. And then there's other areas actually having sort of one of the best starts to a season they've ever had. So, I've been trying to encourage all of my clients to not listen too much to the media that loves to focus on the El Nino event and the downside, but really up to this point, sort of playing each ball on its merits based on what they're seeing around them. So I'm going to cover sort of that normal feed base spring management that we're up against most years, and then look at the failed spring or the end of spring and some destocking and feeding options. And obviously, as we go into potentially this dry period, product prices and input prices very different to the last time. So starting off with sort of a normal spring for me, like the challenges in that space are firstly not chasing break even away, and I'll talk a little bit about break even in a moment, and really holding your nerve. So we do load up our midwinter stocking rate in most areas. We carve in sympathy to our fodder flow. We eat into our reserves, which can be standing dry matter, ground cover, average pasture cover, food on offer. I don't care how you measure it, but we'll create some sort of bank a lot of the time in the autumn, eat into that. And around break even, we're at the lowest point of feed on the farm. We're ready to crack, and we need to know whether feed's actually growing away from the animals or not. Then the second challenge that quickly arises is how do we deal with the excess feed, and how do we move that profitably? In conjunction with that, we're trying to maintain feed quality because we're trying to do red meat production. So energy density and protein, quality of the feed, digestibility are all critically important issues. And then we've got the survivability and perenniality of our plant. So making sure that we are running truly perennial pasture-based systems by looking to maintain that pasture base or forage base indefinitely. So break even, I reckon everyone would know that that's the day that your growth exceeds your demand. Typically, we'll measure it in kilograms of dry matter per hectare per day. So if I've got growth of 45 kilograms a day and I've got 3 steers per hectare eating 10 kilograms a day, then my requirement is 30. So 45 growing, I'm eating 30, I've got 15 surplus. Doesn't sound like much, but if I divide that surplus by the 45 that I'm growing, it ends up being 33% excess growth, or 33% of the farm area or the feed base that I've now got to try to do something productive with. So for me, I guess I'm big on measuring, and I like to do lots of measurements. I don't get too worried about the accuracy of those measurements. I don't really care about how we want to measure it, whether it's standing dry matter or food on offer, ground cover, average pasture cover, DSEs, DSE days, starch equivalent, stock units, don't care. But I think it's critically important to know when we move from that period of deficit into that period of surplus, so where supply is greater than demand. Because if you look at that fodder flow there, which says pasture growth versus requirements on the curve there, we go typically from a period where we're eating almost 3 times what we're growing to a point where we're growing what we're eating, to a point where we're growing 50% more than we can eat, to a point where we're eating 100% more than we're eating, all in the space of 3 or 4 months. So it all happens incredibly quickly. And I think unless you know roughly where your break-even date is, in your head, you've got a figure for ground cover or average cover or pasture cover that you're looking to target, and you know that you're in surplus or deficit around that day, it's really hard to make any seriously good decisions. Historically, there was a lot of debate about how you went about determining growth and requirement and whether it was worth the effort. Now there's that many websites predicting with Outlook tools that predict animal requirement from your handheld apps, AgriWeb, Maya, whatever you choose to use, versus growth. So logging into farming forecaster, um, feed budget tools and tables, it's all there. There's no excuse for not being able to frequently determine where you are in terms of your pasture growth versus your requirement. So that first challenge of dealing with excess feed, so when it turns up, and I have lots of clients that say, well, this is a nice problem to have, and I guess to some extent it is after playing a defensive game for 9 or 10 months. But if we don't deal with it quickly, it can be one of the most challenging scenarios to deal with. So, if we in our rotational grazing systems, we will just speed up the rotation. So we will offer more area to those animals. In our set stocked client base, we'll just allow it to grow away from them. The second part of that is lifting residual, which lifts animal intake. So the more we leave behind in a paddock, or the higher the average residual is under a set stocking scenario, the higher the individual animal intake is. And so when we come through winter, a lot of the time we get used to our paddocks looking like bowling greens. And one of the real challenges is getting clients to lift that residual, to move from, a cover of 1,000 in a paddock post grazing or under set stocking to 1,300, 1,400, 1,500. And knowing that we're not compromising pasture production by doing that, but we're seriously driving animal production. Then the next tool is to build cover. So we've emptied our reserve. So just like a cash flow, we'll have peak overdraft date. In our fodder flow, we'll have a day when we're at our lowest pasture cover. And so we can build that back up, and that allows us to roll feed forward. So it's critical to be able to rebuild that and then to make the spring last more than 2 months, but possibly 3, 4, and 5 months by rolling a higher pasture cover forward. But we can actually only do that to a point, and then once we go beyond a certain average pasture cover or amount of feed across the farm, we start compromising the shelf life of that food, and all the extra dry matter is basically fibre, and it doesn't have a lot of use unless we can prioritise it to animals that can live on a sub-maintenance diet. And then the fourth part of that excess feed problem is actually isolating that feed. So it doesn't worry me whether you're a rotational grazer, a random mover, a set stocker. I think you've got more options if you can isolate the surplus feed. So rather than letting every paddock have a mixture of good quality feed and average quality feed and poor quality feed, if we can actually isolate it, I think we've got a lot more options. So there's two kinds of surplus in my mind, two kinds of pasture surplus. The first one is basically a genuine surplus. So we've introduced every tool at our disposal to eat the available feed, and we're still growing more than we can eat. We've recharged our average pasture cover, so that might be sitting somewhere between 2,000 and 2,400. And now everything we're growing is surplus to current requirements. So there's lots of ways we can move it. We can make it into hay, we can make it into silage, we can defer it and leave it as standing feed. We can try and transfer it as live weight. So probably I would put live weight in the eat as much as we can basket, but I just wanted to talk briefly about the efficiencies of moving some of that feed, and that a lot of my clients often get confused about how efficient it is to move food versus how effective it is. So in my mind, a genuine feed surplus or genuine pasture surplus starts off as a fairly cheap food. It literally has no real value until we can move it. Then we've just got to understand that in different businesses, accepting different levels of efficiency about transferring it are all acceptable. So I don't like to say within my client base that we won't do anything. I think the fuller our toolkit is, the better. So we've got loads of clients that'll make hay, loads that'll make silage, loads that'll make both of those, loads that'll defer. Pretty much everyone will try and transfer some of it as live weight, and will accept those efficiencies in their most appropriate form as being highly effective. So I think what we need to do beyond that is then analyse the cost of moving that feed and which one's cheapest and best fits our individual businesses. So I think the more security you've got around seasonality, the more likely you are to take a higher cost option. And the less security you've got, lower rainfall, less predictability of rainfall, the more likely you're going to move towards cheaper methodologies of moving that feed. So in this example, I've just said, what's the activity here? So I'm going to move some feed here as silage. So my initial cost of that pasture is zero, surplus to requirement, either rotted or it either rots, stands there, or I do something with it. So across our client base, mow, rake, bale, wrap, move it off the paddock, about 158, say $160 a tonne. We always allow for any decrease in food value and any wastage at feed out. So we're looking at getting this back to the animals. If you're looking at making this and selling it, it's a bit different calculation. You're not going to have the wastage at feed out. And in a seller's market, you're probably not even really going to worry about the decrease in energy value. So in this scenario, no cost to the pasture, $158 mow, rake, bale, wrap. I'll divide that by 0.8 to account for the decrease in energy. I'll divide again by 0.8 to account for the waste at feed out. I'll have some cost to feed it out. So 3 or 4 bales an hour is about as good as we get. $120 for a tractor and a man. All through this, I'm just using the figures I use. Put your own in. Not going to sweat whether any of this works or doesn't work with your figures. That's the point of the exercise. I think the methodology is the important thing. So I'd say even that genuine surplus, for us to get it through a bale and back to the cow, about $430 a tonne. Now I've got loads of clients that works quite well, and I've got probably a lot more that doesn't work that well. On top of that, regrowth is a critical benefit of taking that food off. So even at $430 a tonne, if we get 30 or 40 or 60 days of regrowth that we wouldn't have otherwise had by deferring it or letting it rot or whatever we might do with it, then we net that off the price per tonne. And that's often because we go back into a period where we can utilise it, that's often $200, even up to $300 a tonne that we need to net off that. So again, areas where my client base, the season runs out really quickly. So we peak in spring. Before we know it, we're into a really dry summer, looking at 90 to 100 days of zero growth. There's very limited value in the regrowth. If there is, in fact, any regrowth, we'll tend to use strategies like deferment and putting weight on cattle. Where we got good seasonal predictability, good regrowth, good length of season, we'll look to some of those more higher cost methods. One of the methods that we use extensively, and this is even in some of the higher rainfall, longer predictability seasons, is deferred grazing. So I just want to talk a little bit about it. So basically, whether we're set stocked or whether we're rotationally grazed, we will try and isolate this surplus feed. So we'll put it somewhere on the farm that we can go and deal with it later. So it ends up being typically standing hay. There's all sorts of other names for it, some quite derogatory, but we'll isolate that feed and then we'll go back and take it generally with dry stock at very high grazing pressures. So the idea when you bring that back in is to get it back in quickly and under high grazing pressure. If you allow selectivity. You start off with a reasonable quality diet and you very quickly migrate to a very poor quality diet. And obviously, the closer those animals get to calving or lambing, the more consistency we want in the diet. So the higher the grazing intensity or the lower the area offered, just to decrease selectivity. So this is 650 mil rainfall. We dropped it out in summer. It was green. It went brown. We weaned calves and we put some pretty fat cattle on it. That was still fat nearly 120 days later. However, they had lost on average about half a kilo a day. So a feed test sort of revealed that if we were going to push them into this and we were going to get them to eat it, that we would lose about half a kilo a day. So those animals were weighed and, based on the feed test, pretty much came true. Half a kilo a day for 100 odd days was something like 50 or 60 kilos, so about a condition score. Most people have a tolerance level for what they can put up with in terms of animals losing weight. So I think anyone can handle 0.25 of a kilo a day because you can hardly notice it. If you know how to control it, half a kilo is not a drama. And again, if you know how to control it, even a kilo and a kilo and a half per day is tolerable. At the end of that period, those cows had consumed most of that feed. They ran on that area for about 120 days at literally no cost, so highly effective. The feed that we carried and utilised on their back transferred at 80% efficiency, so incredibly high as well. So getting condition on animals is great, and I think the more the merrier, as long as we remember that we literally have to mine it back off to an acceptable level pre-calving or pre-lambing. So if we get them overly fat and we don't mine it off, then we have our problems. If it's there for a purpose and in conjunction with standing feed or sub-maintenance feed, we can achieve very cheap running costs for animals across that maintenance period, then highly effective way of lowering costs of production. One thing I would say with deferred grazing is you should always defer your worst feed first and work progressively towards better and better quality feed. And then as you bring those paddocks back in to the grazing rotation or to being grazed, you bring them back in the opposite order. So you got the least to lose from deferring your worst paddocks. You got the most to lose by deferring better paddocks. So we want them out worst to best and back in best to worst. The second type of surplus is this induced surplus. So we do something typically around just prior to or just after break even, where we're on the bones of our backside in terms of the amount of feed on the farm. We've probably got animals calving and lambing, our mouth power's going through the roof, stocking rates going through the roof, our average pasture cover or brown cover has dropped to its lowest point. And unless we're measuring and unless we know we're now in a feed surplus in terms of growing more than we're eating, panic can set in. So I see lots of really bad decisions happen at this point in time. And typically it's nitrogen or a bit more grain feeding or a bit more silage or a lost animal production that induces a surplus 30, 40 days down the track. So from an economic perspective, we didn't need to spend that money. So then the cost of dealing with that surplus comes at the cost of the feed we introduced to generate it. So if we apply nitrogen that we didn't otherwise need, we might put on 40 units of nitrogen per hectare over a third of the farm. So at the margin, we generate feed at $185 a tonne, 10-to-1 response to the nitrogen, ends up being surplus. We have to mow, rake, bale and wrap. It's no different to making the cost of a genuine surplus. Again, we decrease the energy value or the food value by 20%. We have 20% wastage at feed out. We've got a cost of feed out of $120 a tonne, ends up at $650 odd a tonne. So quite expensive. Similarly, if we were grain feeding, and we grain fed too long, we'd have a cost of generating that surplus at the cost of the grain, the marginal cost of the grain, so $400 a tonne. And then the costs into the silage bale, decreased quality, loss, wastage, and then feed out costs. So around $1,000 a tonne. So often these costs are hidden, but at the end of the day, inducing these surpluses is really a really costly expense to the business. Just a warning, another thing I see a lot of is across land classes. There's areas of the farm that only ever seem to generate feed in spring. So like unimproved pastures, run country, treed country, timbered country. I see so many people sending animals up there when there is some feed coming and it's reasonable quality at the expense of their improved pasture. So again, sending those animals up there to capture that at the expense of our good quality perennials generally compromises profit incredibly. So there's a very low business value food when you don't need it. So to go up and capture it just because that's the only time there severely compromises profitability. The other one I see a lot of is people who lock up supplements, so hay or silage or even deferred pasture. So the cost of locking up supplements at the expense of potential animal production is the cost of that foregone production. So it takes about 40 megs or 4 kilos of dry matter, produce a kilo of live weight. This loss is not as big, unfortunately, as big as it used to be, but $2.50 a kilo of live weight at 4 kilos of dry matter to generate it is a starting price of $625 a tonne. So unless someone's paying you a lot of money to produce something out of season, never compromise animal production to squirrel stuff away. Because if we look at a $625 entry price, we know it's going to be over $1,000 a tonne to get it back to the animal. And as a result of that, we know that in that deficit, we'd have lots of options between $1,000 a tonne and $200 a tonne that we could exercise. Maintaining feed quality. So this is critical. Spring feed to me is usually pretty good stuff. I mean, I love that stuff that Cam Nicholson did around weeds. And if those weeds were green and they were vegetative, in a lot of instances, they're as good as any of the improved perennials that we grow. So it's critical to maintain feed quality. And basically in spring, that's just decreasing elongation. So those plants will want to elongate to either seed or because they're shading themselves as their leaves get bigger, as more nutrient becomes available, as we get more mineralisation going on in the soil and more water availability. So we've got to jump on top of it. In a rotational grazing system, that's easy. We just speed up the rotation and we skip over paddocks. Set stocking, we've got to box mobs or we've got to recruit in both rotational and set stocking by purchasing animals in or bringing animals in. I'm continuously fascinated by how many group days I can go to and we stand around looking at the ideal turd. And I think any of this pooology stuff, as it's often referred to, is a load of crap. We are not in total mixed ration systems. We are in pasture-based systems. And I think, although I've got no evidence, that the pastures have evolved to be grazed and animals have evolved to graze pastures. So if we look at the feces associated with increasing digestibility, then on the left-hand side there, we've got something that looks like a circus animal did it, an elephant or a camel. In the middle there, we've got one that's often described as the ideal byproduct output. It's as high as a credit card. It's often got 3 concentric rings. And, in that case, I mean, that animal's so happy around its rumen function that it's even managed to poop a love heart into it for you. And then we have the one on the right that's often said, well, that's a scow, that's moving through the animal too quickly. And we need to slow passage and we need to increase NDF. And similarly with the sheep. We start to see these softening of the feces and we're wanting to add all sorts of stuff. I think something that we ought to be doing if we're unsure of the quality of the feed is a feed test. And um, around my client base, I don't do many feed tests. It's pretty predictable what the quality of the feed will be. But certainly in some of the other areas with less predictable rainfall, massive species diversity, you get an amount of feed, it grows quickly, it changes in its quality quickly, then feed tests are really useful. But in this instance, I just want to highlight a couple of things. And don't worry about the fact that you can't see these as I highlight them. I'll put them in a table in a second. Um, this grass has 43% NDF, so that's awesome for rumen function. So they chew that, they make saliva, and balances the pH of the rumen. Despite the fact it's 43% fibre, it's 86% digestible. So this, to me, is the magic of grass. Um, it provides fibre to make the rumen function, but then it makes sure that that fibre is also digestible and increases the energy content of the feed. So in this instance, we've got metabolizable energy here of 13 megajoules. So that's the same as grain. Yet we spend lots of time saying this is moving through the animal too quickly. It's got a bit of protein overload. You can see there that it is 26% crude protein. So that's not perfect for necessarily for rumen function, but at the same time, introducing feeds to dilute that when we're in a period of excess feed means that every time we feed something to correct that and we create a surplus, we're creating those very high costs of getting it back into the system. The other one that I think is fine in mixed ration enterprises, feedlots, or even when the fibre comes up, it's this 120 divided by NDF, which is a standard for calculating the intake of an animal as a percentage of its body weight. So for that feed at 43.5% NDF, if I divide 120 by that, I get 2.75% of body weight. If that was a 400 kilo steer, that'd be 11 kilos, and it would do about 1.5 kilos. Now we know that these animals can do a lot more than that. So I've spent the last 20 years trying to encourage producers all around the world, dairy, sheep, and beef, to challenge their animals to fit in another kilo of pasture dry matter at about 100 to 150 up to 250 bucks a tonne, rather than supplement that diet with something that's double the cost and results in substitution that it then ends up going through a conservation process. So I see every day, I've got clients that are, up over the 140 divided by NDF just by ensuring the feed is exceptional quality, as it often is in spring. I think everyone will be familiar with the sigmoid growth curve. So basically, anything that's alive goes through that. We all start off growing slow. We get a bit of mass about us, whether that's leaf area index or body weight. We can consume increasingly more each day, and we can grow at an increasing rate. And so for a plant, we want to graze that plant somewhere between the middle and the end of phase 2, which is where we've got optimal quantity of the feed. And once we go into phase 3, that plant doesn't stop growing. It rots a leaf and grows a leaf in a perennial plant. And if we miss a leaf, so we grow one that rots, we will lose typically, if you're above 650 mils of rainfall, about 300 kilograms of dry matter per hectare. If we fail to grow a leaf, then we'll lose about 500 kilograms of dry matter per hectare just because of that sigmoid growth pattern. The other thing about that is this ability to control the interface between, or the rest period, or stocking rate in set stock enterprises, to be able to graze those plants after they've had the optimal rest. So a plant, because it's evolved in conjunction with animals, it'll do everything it can to avoid being grazed prematurely. So it needs to go through a process of regrowing from stored nutrient, recharging the stored nutrient, so to be able to tolerate grazing again, and then reproduction. So here's a number across the top. There's a number of ratios there. The first one's carbohydrate to protein ratio, basically. You can see when that plant first starts to regrow post-grazing, that ratio is 1 to 1. If you go right to the bottom there, you've got what's optimal, which is 2 to 1. And you can see that as the plant gets into a position where it can, one, survive grazing, and secondly, reproduce, all of those ratios become more in alignment with animal requirements. So I haven't got enough time to go into the detail there, but certainly plants are trying to deter grazing or make themselves unpalatable in order to obtain enough rest period to be able to regrow and reproduce. Survivability. So this is a critical part of the spring grazing system because most plant tillers only last about a year. So if you've got a 50-year-old pasture, it's a collection of year-old tillers, basically. They generally don't like regrazing, but they're generally hard to kill by grazing down low as long as you do it quick and you go away, or they get some rest period. They need light at the tiller base to reproduce, and daughter tillers are only produced after the parent has enough energy to survive grazing. So historically, I would have thought quantity of production, number one, quality, number two, perenniality, number three. I got asked to look at the benefit cost of pasture renovation, which was basically survivability. And like I was quite amazed at just how important survivability is, or perenniality, to the point where I'd say it's now number one in my mind. Quality of feed is number two, and quantity is actually number three. But the great thing is they can all go hand in hand. Basically, this is saying, if you look at the results at the bottom, option number two is a pasture that's been renovated because it had 30% or more weeds. It's got a really high rate of internal rate of return, which is return on your money, but it's actually got a long period to break even. So what it says is you can't afford to wreck a pasture, but if you do, you can't afford to renovate it and make it better again because it's got the potential to return so much. Feed profile. So I think if you're managing daily on your growth and demand, over time you get a picture of what your fodder flow looks like and your animal requirement looks like. So I've sat round in many meetings looking at and debating when we should calve, when we should lamb, whether we should trade, whether we should background. And we've done that in the isolation of knowing the fodder flow. So I think there's lots of consultants out there that will all agree that you must marry up to the best you can your fodder flow with your animal requirements. So, and all that is working with Mother Nature. And if you graph the pasture growth rate line in your feed budget and the animal requirement line, you'll end up with something like this, which quickly and visually tells you what you're up against if you want to fight Mother Nature and calve or lamb or trade out of season. So for me, all that stuff is about the methodology that's important. I'm not going to say to you that anything's right and wrong. And I encourage you all to do your own figures, but I'm really conscious of the fact that man maths or bush economics dominates our space. And so I've bumped into so many people that have already figured out what they're going to do and they've worked backwards and justify it. Most of my new clients over time, I've had to go into businesses and do exactly the opposite to what I want to do because the mistakes and the downside is so big that the only option we've got is to buy our way out of problems. I'm 100% convinced that it costs you about $1 to avoid a problem in grazing systems. And if you don't, it'll cost you $3 to buy your way out. And I think that's worse in a failed spring or towards the end of spring when the stakes are really, really high. So just moving on towards the end of spring when we go from the nice problem to have, which is too much feed, to not enough. And I think some of the challenges are, particularly this year, is, in those areas that have had failed springs, there could be more to come. We could be going into this El Nino cycle, which has now been confirmed. And, that means a lot of different things, a lot of different areas. But yeah, no winter rainfall, no spring, and then the chance of that ongoing at red meat prices and high input costs is going to be pretty challenging for a lot of our clients. So I always think there's this thing about what you should do and what you can do, and what you should do is always adopt an economic approach in analysing these problems. So that's always about marginal cost, marginal revenue. So design your business around averages and then manage them at the margin. If we adopt a marginal cost, marginal revenue approach to decision making in the pasture space, then we're always operating around the profit maximising point. So the profit maximising point in some years can be the choice between two losses, but you're going to pick the least cost loss. Working on average costs, which is what we all talk about, that's what the whole industry talks about, is the average cost of feeding this and the average return, is a killer. And it's a bigger killer when you haven't got enough feed. So if you're operating where you break even at an average cost and average returns, then you've already lost a whole heap of money at the margin. Once you've done that and you've figured out what you should do from an economic perspective, it's all about how much cash you've got to do to make it happen. So you can look at longer and longer term horizons, the more cash or the more assets you've got to back your decisions. So I'll have lots of clients at the moment, and we're looking at all our mobs, all our animals over 30-day periods. Are they profitable over the next 30 days? So massive cash pressure. Other clients have got infinitely strong balance sheets. We've got bank managers knocking down the door to give us more cash. We can take much longer horizons on those decisions. I reckon decisiveness is really important. So at the moment, I just think destocking has and always will be a much more powerful tool and a much more blunt instrument than feeding. So once you cull or once you destock, they're gone. They're out of the system for good. It has a big impact. Feeding, we can do that pretty marginally. And they're not mutually exclusive. And even in the last dry period when we had, record high red meat prices and reasonable input prices, all of my clients destocked in conjunction with feeding. So that marginal approach in the last drought, and those were, 2, 3, 4, and 5 year dry spells, on a lot of farms got us to about 30 to 40% of long-term average stocking rate, and we were able to hang in there. We saw lots of other people who fed too many animals for too long, almost like all-up gamblers, and then got to a point where they couldn't feed anything and had a complete destock and then had to re-enter at record highs. So the steps around this marginal approach are firstly determining the feed resources and their suitability for animals. We need to destock the unprofitable animals. I usually think that's easy to analyse around mobs. And then we need to maintain only the profitable animals within the profitable mobs, which I don't think's often well done. We often look like, oh, well, there's a bobbin feeding the lambs or a bobbin feeding these pregnant ewes, and we feed them all. So what that does, if you adopt this approach, is it just sets the animals up to compete for these scarce resources. So the average cost doesn't, it means we'll lose at the margin. What you'll do is you'll feed a lot longer or you'll destock a lot later than you should, and you'll feed more animals than you should. So for me, there's only 3 types of homegrown feed, and we often don't have all of them on the farm, but there's growing and finishing feed, there's holding or maintenance feed, and there's feed that animals are going to lose weight on. And there'll be certain classes of stock that'll compete for those. So profitable mobs, just as an example, let's just say our lambs and our ewes are competing for pasture, which is, a really common scenario that I come up with towards midsummer, late summer into the autumn. And we decide to feedlot the lambs, run the ewes on the pastures that the lambs could have eaten. So what most producers will do, and even a lot of advisors, is they will work out if there's a margin on those specific activities. But it's really important in primary production and specifically grazing systems to not just do something that's profitable, but to continually do the most profitable thing. So if we feed like those lambs a 50-50 diet of say, veg, hay and grain, you can work it out for your own business at $250 and $350 a tonne of dry matter respectively. Then the cost of that diet's $300 a tonne of dry matter or 30 cents a kilo. If we feed 2 kilos of that, we'll produce 250 grams of live weight at say $2.50. So it's going to cost us 60 cents. And at $2.50, if we do a quarter of a kilo, we'll get 63 cents back. So we had a margin over feed cost of about break even. So on a 30-day analysis, we might say, righto, we'll break even. We'll see if something happens over the next 30 days, either an increase in land price, a reduction in input prices, or some rain. But the lambs are up against the ewes, and the ewes are eating pasture at $100 a tonne. And if our lambing rate's 100% and a wean lamb's worth $50, then I run that ewe for 365 days to get $50. So her daily return is about 15 cents. Now, we can debate this all day long, but at the end of the day, you can add a lot of benefit to that ewe before she'll raise up above these lambs. So we can run them on a kilo a day for the next 30, 60 days. In maintenance mode, it's going to cost us 10 cents. We've got a margin. But the reality is that because the ewes are competing with the lambs for food, the cost of the ewe's diet at the margin is the same as the lamb. So it actually has to be priced at $300 a tonne to see who we're better to get rid of and who we're better to feed. So if we feed 1 kilo of dry matter at 30 cents, then and we get 15 cents back, then we're losing 15 cents a day on the ewes at the margin. So it's really clear that we need to get rid of some ewes in that scenario, and it's going to be the costliest group of animals, so it's probably the old ewes. And we start grazing the lambs on the grass and achieve the widest margin. So in this instance, that'll mean we'll get the return of 62 cents and it'll cost us 20 cents to feed them, and we'll get a return of about 42 cents a kilo. Yeah, you can have all these slides so you can work through it, and hopefully we can go into a bit more detail. But basically, if I compare those two sources of feed, the lambs give me a return of 21 cents per kilo of feed fed, and the ewes lost 15 cents per kilo of dry matter fed. So you can set up little calculators, you can put all your mobs in, you can put what they're going to return over the next 30, 60, 90 days. You can feed them all at the margin on the highest cost of feed, and the animal that returns you the least is the animal that has to go. So if we work out that the lambs are the most profitable, we can now feed them 1.5 kilos of pasture and top them up with 250 grams of grain at $350. Average cost of the diet is $120 a tonne now. They're going to do 250 grams a day still. So it costs us for 2 kilos, 24 cents. And we're going to get a return of 63 cents. So we've got a margin of 39. So on average, that's really good. But we could get rid of one lamb and save 2 kilos, and we could save that all as grain. So again, the marginal cost within that mob is the cost of the grain. So until we're at a point where we can't feed any less grain in the diet, we can keep pulling it out. So to break even at average, the lambs need to do 105 grams. To break even at the margin, they need to do 360 grams. So this is where it gets scary, because people look through that and say, I've got to get rid of half my lambs, but you don't. You just start dropping out the bottom. You start dropping the amount of grain going in. You start widening the margin, and more lambs continue to pay, and your profit goes up and up. So I think I got one slide ahead of myself, and that's what I said. So just to summarise, I think spring generally offers a heap of opportunity, but you need to know where you are relative to average or expectation in any given year. Critical to know around break-even date whether we actually pass it in terms of growth and requirement, or whether we're still eating into food that we may not have. And at that point, we can effectively supplement, or we can hold our nerve and carry on. Doesn't matter how we measure it, but we need to then rebuild that so we can roll feed forward. When we've got genuine surpluses, they need to come out quick in order to maintain quality. And I think that as producers who grow a lot of high quality feed, that you need to be really hard to convince to manipulate that diet over and above that awesome quality feed that you're generating. If it fails or when it ends, I think we just reverse the pasture principles. So we go back to playing that defensive game. We push out to longer rest periods, or we destock in set stocking scenarios to increase the time that those plants have got for recovery. At low prices, we've just got to get back into a destocking mindset before supplementing the deserving animals. Feed at the margin, so always challenge every animal that's competing for the food to generate a return over the highest cost feed, not the average cost of the diet. Only feed the profitable mobs, and then only the profitable animals within that mob. And I mean, I know that sounds simple, but the number of lambs that go either onto high quality feed or feedlot scenarios or supplement scenarios that are meant to be there for 60 or 70 days and are still kicking around 120 days later is phenomenal, just from what I see in my own client base. That whole destocking scenario is never, ever as ugly as it feels, because we just start knocking off the least profitable animals. We free up cash to look after the most profitable animals, and we can change that scenario around quite quickly. So that's me, Tanisha. So back to you.
Thanks, Basil. I'll just reshare my screen for everyone. Thank you. That was a really good overview of the two distinct different scenarios that are happening out there. We've got a few questions that have come through already, but if anyone has any extra questions to ask of Basil, please head to Slido and enter the code on the screen, or scan that QR code that's on the screen there now that you can see. The first question that we've had come through, Basil, is how do I know my break even date?
Yeah, so I think initially, um, you pretty much everyone I know knows their DSE ratings of their animals. Now, a DSE rating's not the same as what you're feeding that animal, but it's a good starting point. So through that period, each month, as you move from animals that are getting maintenance to lambing or calving, we have a DSE rating per hectare for each month. Then it's just a matter of marrying up that DSE rating. So I'll describe that one DSE equaling 1 kilogram of dry matter. So if you're at midwinter 15 DSE, then you move into spring and you go 20 and 25 is your peak. Then the day you grow 25 kilograms of dry matter per hectare per day is your break even date. And again, like, I'm a huge fan of these measurements being done frequently, and that frequency trumps accuracy. So you only need to know roughly where it is, because the whole time you're trying to manipulate the fodder flow around it. So it can move a lot. So, um, if I synchronize all my heifers, my stocking rate goes through the roof a lot quicker than if I make them for 8 weeks to a bull. And so what will happen is my break even date under a synchrony program will move out, and I'll actually need to move more closely to it.
Great. Thank you, Basil. The next question we have is there a standard rest period when regrazing in spring?
No, no. So, like, I think there's lots of ways to skin a cat. So, and there's nothing right or wrong in how you go about deciding what grazing system suits you. Like, I've got my preferred methodology, which is around plant morphology, and it's just me. Tanisha, you've got clients that are in the rangelands and complete unpredictability in rainfall, massive number of species, growth when you don't know when it's going to happen. So that there's different management systems. So my rest period will always be around the morphology of the plant. So I'm always trying to say, is it a 3, 4, 5 leaf plant? And then I know exactly what that plant, in inverted commas, is trying to do around morphology, and my rests align with the most feed grown at the highest quality, at the highest level of survivability or perenniality. So no, there's no standard rest.
If someone wants to learn how to better understand plant morphology, where would you recommend they go, Basil?
I'm amazed, like um, how much stuff's on the like Evergraze is amazing to me. That you can still find stuff. You can literally look up plant morphology for any species, phalaris, ryegrass, cocksfoot, fescue, anything you want, and you'll be able to find its leaf stage, its preferred leaf stage of grazing, and then how to manipulate that.
Excellent. The next question I have is, can you just go over again what the average cost approach is and why this isn't always appropriate?
Yeah, so I think the average cost of a diet or the average cost of a feed is a combination often of, say, two or three inputs of varying costs to get an average. And we can take out part of that diet or part of that cost at the margin and an animal that's eating it to lower the average cost, but to get rid of the loss at the margin. So um, if I give you an example, like I did there, but there'll be a lot of people running around in the next month or two saying, I think you should put on nitrogen in some of these areas to grow silage to sell it. And they'll say you'll grow this much tonnage, and on average that's $60 a bale, and you're going to be able to sell it for 120. Well, the reality is that you grew 2/3 of that bale at $100 a ton, and you grew the last third at $200 a ton. And the $200 a ton part of it could have been left out. And so you can grow it at 100 and sell it at 200, or you can grow it at 150 and sell it at 200, or you might grow it at 150 and sell it at 120. So you don't always go for the lowest cost of feed. You just need to know that by increasing the average cost at the margin, that you're more than covering that with the return from the animal or the person you're selling it to.
Okay, thank you. We've got time for one last question that's come through tonight. Is how profitable has buying in additional stock to eat or use up surplus feed been across your clients?
Wow. Um, yeah, look, I always look at my clients and there is an inherent where angels fear to trade in a trader space. Like for me, I set the system up on average, and then they're only little marginal trades or opportunistic trades, but having a massive spring where you go into the market and like I always think in the beef space, you're competing against a lot of people who woke up that morning and also discovered they had a lot of feed and the price is going through the roof. So I'd say on a whole, it hasn't really paid that well. I think we get caught on what we think we can do with those animals. We don't truly analyze the induction period, like that 2 to 3 weeks where they just don't do much. We're always overly optimistic about what their growth rate's going to be, and then generally disappointed in what we do at the end of the day. Like I'm just super keen to set year in year out systems up at year in year out stocking rates, and then just tweak them a bit as we go. I really for me, I've only got a handful of clients that are pure traders. Um, and I just think a lot of the time they just need a fat wallet and to be fearless. Like for those guys, there's no money in not having stock. So it's easy. Whereas, if you're an opportunistic trader, you always wait a week or too long, you confirm it's there, everyone else is waking up, you pay over the odds. So it really probably hasn't, I'd say. Um, but I'm really conscious about not generalizing. Like I think some of my clients do it really well, but they'd be in the minority, the vast minority.
Excellent. Thanks, Basil, and thank you very much for sharing your insight tonight and expertise on spring pasture management. There are a few extra questions in there that we haven't gotten to this evening, but we'll make sure that we address them in our podcast that Basil and I will be recording, so that should be out next week. If anyone's got some questions sitting there, make sure to tune in to Basil's podcast episode. Those listening here tonight, if you have any additional questions or suggestions for future webinar topics, please reach out by completing this survey at the QR code on the screen or clicking the link in your Slido. This feedback's really important for us. It helps us to guide future webinars and making sure that we're bringing you topics that are relevant to you and things that you want to hear about. If you're listening to this recording, please also complete this survey. They don't close after the webinar, so you can complete the survey at any time. Thank you again for attending, and we look forward to you all for joining us next month in our webinar with Dr. Jill Kelly on livestock containment feeding and looking at how this might fit into your business. And if you missed last month's webinar, make sure you head over to the MLA or Agrista website to watch it. And as I just mentioned with the plug with Basil's questions, be sure to check out our podcast series. We go into a little bit more depth on some of these topics that we're covering with our speakers. You can find it on all major podcast platforms under Productivity and Profitability Media Series. Be listening, and thank you again, Basil. That was a really, really informative webinar.
Thanks, Tanisha. Hope everyone that needs rain gets it soon.
Thank you, everyone.